Hello everyone, this is Nityan Gowdaswamy. I'm going to talk about 1061 new additional column changes on short-term liability and long-term liability values calculated on the new operating and finance schedules. The additional columns will be added interest reduction, accrued interest balance, principal reduction, short-term liability and long-term liability. Agenda. We're going to go through changes to the accounting schedules and the calculations of these five fields for payment in advance and calculation of same five fields for in case of a payment in arrears. And we're going to go through some quick demo and Excel spreadsheets and in the product lease I'm going to show. And then we're going to talk about the patch helper, what the patch helper does, and how you can fix the existing leases and some reference material. So these are the five fields added into tri-fiscal line item business object. So those are the real business object field names and corresponding labels are interest reduction, accrued interest balance, principal reduction, short-term liability and long-term liability and columns added into the operating and finance schedules, both accounting and local reporting tabs. The calculations remain same between operating and finance schedule. There is no difference. So we're going to look into payment in advance calculations. So for the new lease and adoption, the same formulas used for both new lease and adoption. So interest reduction. Interest reduction will be basically it's a if formula. If net rent payment minus previous accrued balance is less than or equal to 0, then net rent value. Otherwise, previous accrued interest balance value, it will be populated for this column. And accrued interest balance is same way like in a previous accrued balance plus interest expense plus interest reduction. Principal reduction is simple, straightforward, like net rent payment minus interest reduction. Short-term liability is the sum of a future 12 fiscal periods. For example, if we have 2019-01 is my first fiscal period, it is basically 2019-02 to 20 12 months from there, like 2020-01 up to 2020-01. It's a sum of principal reduction value. And long-term liability, little tricky. The first fiscal period, the first fiscal period, in my case, 1/1/2019 is the accounting start date and end date is 12/31/2020. So in this case, the first in 2019-01 fiscal period, the formula for long-term liability will be opening NPV minus principal reduction minus short-term liability. For the rest of the fiscal periods, 2019-02 onwards, the formula is little different. The previous short-term liability plus previous long-term liability minus current principal minus current short-term liability. So the payment in advance, what happens when you do the modification? When you do the modification, the formulas are a little different. Some for some fields. Interest reduction for the first fiscal period, that is a modification effective period. Net rent payment minus opening balance is the less than or equal to 0, then net rent value. Otherwise, it will take opening balance value. In this case, the opening balance will be 0. Opening balance is not the previous fiscal period value. It is a opening balance. If you have something for that modification. For rest of the fiscal period, the calculation remains same as the initial lease. Accrued interest balance, same as the modification, period. The calculation will be opening balance plus interest expense minus interest reduction. For the rest of the fiscal periods, same as the new lease. Principal reduction, same as the new lease. Short-term liability, same as the new lease. And long-term liability, one small change, like, instead of opening NPV, it is modification NPV. Rest all same as like a new lease. When it comes to impairment is a kind of a similar. For example, if you do the impairment on a certain modification period, like 2019-06, so basically the calculations kind of remain same. Whatever the new lease activation, what you do, the same way. Whereas in a modification, you see that there is a difference, like, the values, or like, it will be reset from the modification effective period. For impairment, this will not be reset. It will be like, doing the same calculation. I just put the calculations here. It's kind of a similar to new lease activation, but you will see the same values. You don't even see any difference in these columns. It will be like, continuing the same way in a new lease activation. Or if you do modification on top of modification, the previous modification, whatever it was, the same thing it should be here also. Eh, it, the calculations are little different for payment in arrears leases. One column is going to be different, right? Interest reduction. Rest all is kind of the same as a payment in advance. In this case, the interest reduction is little different. Net rent payment minus previous accrued interest balance plus interest expense is less than or equal to 0. Then net rent value. Otherwise, it will be previous accrued interest balance plus interest expense. Accrued interest balance is the same as the payment in advance, previous accrued interest balance plus interest expense minus interest reduction. Principal reduction also same. Short-term liability is the same as payment in advance, and long-term liability also same. When it comes to modification, it's the same as a payment in advance, but only difference is the interest reduction field. Here also it's kind of a little, only that field is formalized difference. Net rent minus previous accrued interest balance plus interest expenses less than or equal to 0, then net rent value. Otherwise, the previous accrued interest balance plus this value. So rest all kind of a same thing for payment. Only one field is different. Impairment again, same thing. Interest reduction formula is different. It's again, it's the same as like in a new lease for the payment in advance and payment in arrears. So we're going to go through quickly some Excel spreadsheet how these calculations are calculated, and then we can go see in the product. The initial lease, if you look into it, the initial lease is like the first period. It's basically, as we talk about, that the previous balance is 0 and net rent payment. So whichever is less than or equal 0, then otherwise in the net rent payment, otherwise it's not less than 0. So it is like opening balance, that's a 0. Second column, if you look into the second line, the calculations are like in a previous accrued interest balance will be used here instead of like the opening balance of 0. It's a kind of a same thing carry forward for all the columns. You see this one. This Excel spreadsheet, actually I downloaded the schedule from TRIRIGA, and then I put the calculations. It's these two columns are same, but just show the calculations. I did this one. Same thing like interest accrued interest balance. We calculated it's the same way like as we discussed in the formula, and principal reduction. It's like net rent minus interest reduction. And if we come to short-term liability, this is kind of a formula like next future 12 periods of principal reduction. When it comes to long-term liability, it takes the current NPV, that's the opening NPV, minus principal reduction minus short-term liability. For the second one, if you see, so the previous principal reduction, principal reduction, the previous no sorry previous short-term liability and plus long-term liability minus previous principal reduction minus previous short-term liability. That is the calculation. It's the same calculation carry forward. So your long-term liability should come down to zero. If it is not coming down to zero or like some fraction, then there is something wrong in your calculations. So like you see here, like it comes down to 0 2. That's the fraction is it's okay. Like that's if it is not coming like that, then there will be some formula problem. There is some issue. So the similar lease, I did a modification. The same lease, I did a modification on 2019-06. And now if you see 1906, like, it is like, it is reset the values here when you do the modification. So that as if like, it is calculating again a new thing from here. It takes the opening balance. It's not the like, previous balance. It's the opening balance. And then opening balance in this case is 0. Then it is carry forwarding from there. And in the same way as the second lines are, it's the same thing. And again, the same thing, if you see long-term liability, it should come down to 0. When it comes to impairment, you see that one, the same, the same lease, I did the impairment. And it's a, similar date lease, like it is not exactly the same lease, but it's a similar lease I created and then did the impairment on that. When we do the impairment, so this numbers are, from it is continuing the same numbers. Like, there is no reset. Like, in case of modification, you saw there is a 0 in it. But whereas in impairment, there is no 0. It's the same value initially what you continued or whatever your previous schedule is. Like in a previous, if you modified and then this one, it will be same kind of same kind of values continue for the impairment. There is no, you shouldn't see any change for the impairment. In case of adoption, in this case, adoption is like, it got cut, like adoption date is 2019-06. So it got cut. It is basically treating as a new lease. It starts over from here and calculates everything as same new lease. This is for payment in advance. Similarly, for payment in arrears, it's again the first interest reduction column is the difference. Rest all it's the same as payment in advance. So the calculations are same, and if you see the long-term values are coming down to 0. When it comes to modification, again it's the same thing. Like the calculations a little different for payment in arrears. Only is interest reduction column. Rest all remains same. Impairment also same thing. Only interest reduction column, and also adoption also is the same. So let me go to product and show some leases I created. So if you see initial lease for payment in advance, so I have local reporting enabled. And if you look into this one, right, the 2019-01, this is a lease is from 2019-01 to 12/31/2020. So interest reduction for the first period is 0, and then it's calculating in this one principal reduction, which is like net rent minus interest reduction, and it's keep going like that. And if you see short-term liability, this and long-term liability, and eventually long-term liability should come down to 0, or like in a fraction of numbers, like same thing for finance schedule. Finance schedule, you see that numbers remains the same as like operating schedule, and interest reduction is the same, and principal reduction is the same, short term, long term, everything, and it comes down to same, exactly the same calculations. And let's see the modification. Modification. So I did a modification from 6/1/2019, the same you saw as like a previous lease. You see here, it is like, interest reduction. You see that it has got reset from here. The values are like, kind of a reset, and start calculating from here, from a same as like in the previously one. Whereas you will not see this in case of impairment. Now I'm going to show that same thing to finance schedule. So the 2016-01, you see this again restarted every values here. I'm going to go on to the impairment piece. The only difference you will see is the impairment. It's a similar lease, but I did an impairment from 10, 6/1/2019. If you see 6/1, there is no break here. It is continuous, like no reset, nothing. It's the same calculations keep continuing. Doesn't matter what is your previous changes to the lease. Like if it is previous lease is modified, and you would see the same kind of a modified one, whatever the values, it's the same thing. It will continue here also. You will not see any difference, but eventually long-term value will come down to 0. Same for the local reporting tab also. Okay, similarly, I have payment in arrears leases. You go and see, the only difference you will see is like interest reduction field. Rest all is the same calculations, and same thing. And the long-term liability comes down to 0, and finance lease. It's the same thing. I don't need to go again and over. Okay, let's move on to presentation. Now we saw a demo, and let's move on to next one. The patch helper. We have a patch helper. Try patch helper. Try calculate 10604. Basically, we did all these changes in 10604 fix back, but it is also included in it's a mod release 1061. Update short-term, long-term liability on existing leases. This dispatch helper actually updates on all the existing leases, and goes and calculates, like a helper below is update the interest reduction, all this 5 columns for all history leases and current leases that are in active, review in progress, routing in progress, revision in progress, revision accounting in review. For current leases that are in active, all this those fields will be populated on the current leases as well. For current leases that are in revision in progress and revision accounting and review, the user will need to click on the recalculate accounting schedule themselves to these fields to update it. So there is a note in this case. It's like these calculations are too huge, so it will take the patch helper will run for a long time. If you want to minimize that, like you smaller chunk of leases you want to process, you can use the workflow existing asset leases and RE leases, STLA, patch helper workflow, query. You can go and filter the leases. Before triggering the patch helper, please inform your user that they should not revise their leases or do anything with their existing leases until the updates are completed. That's the patch helper workflow name. Reference material, you can refer a 10.6.1 release notes, and also you can refer a 10.6.04 release notes, and the APAR as part of this fix is like IJ 15199. That is the APAR we addressed for this issue. And thank you. This is the conclusion of um, my presentation, and hope this helps.